Hello, my name is Kyle Wells. This video is for prospective buyers and sellers looking to understand how interest rates are affecting their bottom line. To begin, I want to check out how interest rates are moving today. Today is Thursday, September 29th, 2022. And if we can see from this screen, the interest rates are floating around 7%. This is what it ended out yesterday, 6.82% for a 30-year fixed loan. If we look down here, we can see that it is trending in the negative direction, which means it's going up. And if we look at this graph over the timeline, this is all the way back to 2013. We can see the interest rates got us below 3% for quite a while, and at the end of 2020 and all the way into Q3 about a year ago, 2021, they started going up dramatically. And so what that means for sellers and buyers is if we go to a home price of $500,000, which is very typical and reasonable in the Tri-County area of Sacramento, Placer County, Sacramento County, and Dorado County. $500,000 purchase price, 10% down, 30-year fixed conventional loan, 3% interest rates. You're looking at a payment of $2,600 if you include a little bit of PMI, insurance, and taxes. So this is your monthly escrow account payment. And as we move this interest rates, move it to 7, which it peaked at, I think, on Tuesday. It was above 7% as an average. We're looking at a $1,100 monthly payment increase. So you can see the drastic change that a raise in interest rates can occur. And if we're a buyer approved at that $2,600 mark, and a year ago we were looking at $500,000 houses, and our income's the same, but this interest rates have gone up, we're going to have to dramatically decrease the purchase price of prospective homes to get back to that 2,600 range. So you can see 360,000 at 7% interest rate is still more than what we were paying a year ago for a $500,000 house. And if we reverse engineer it, let's see, 500,000 again, looking at that almost 3,700. Let's drop this to 3 and go back to. So conversely, a buyer last year that was approved for a monthly payment of $3,700 is now looking. So back then, a year ago, they're looking at a home for $725 at 3% interest rate. Now at that same monthly payment amount, $3,700, they are looking at a home at $500,000. So at this point, something's got to give. Either buyers need to start earning more money, or more likely, and what will happen in the short term, is home prices will start coming down to where they meet the perfect confluence of what a buyer can afford and what the seller is willing to take. So in this market, we have a lot of price decreases for motivated sellers, and we see a lot of expired and canceled for non-motivated sellers who aren't quite willing to sell at less than what they were willing to sell it for maybe a year ago.